Good day, fellow investors. Welcome to the stock market news, where we discuss the news that really count when it comes to long-term investing and wealth accumulation. In this video, we're going to give a stock market overview, discuss the economy, of course, see how all that's well now impacts also the stock market that is, let's say, emphasized by the recent Coinbase IPO. That is also one part of the investing world, so good to touch on that. And we'll finish on where to hide, how to invest, and you will see whether that is something for you. If you get value from this video, smash that like button. Thank you. Let's start. What is really remarkable about the stock market is that it has doubled over the last 5 years. That's something incredible. So in 5 years, the stock market has doubled. That's crazy. That's really insane. That's great for those that have to sell stocks, not so great for those that have to buy stocks, but that's the stock market now. Is it a bubble? Where can we hide? That's something we'll try to answer in this video. The Nasdaq did even better over the last 5 years. This is insane. Almost tripled over the last 5 years. Tripled. The German index is up. This is what? 50%. That's also extremely exciting for Germans, even more than the Nasdaq tripling for Americans. However, there is also something different. If we look at emerging markets over the last 5 years, yes, it went up approximately, what is this, 56%, like the German market. But if we look at it from a longer term perspective, not from the downs, then you can see that practically it went absolutely nowhere from 2007. The 2000s were great for emerging markets when it did quintuple. So you see what happens when something quintuples. Sometimes and often you might see a crash, you might not see a crash, you might see a lot of small volatility, but it didn't go anywhere for 15 years. You can call this, the 2007 was definitely a bubble. If we look at longer term, this is 5x. Will it be equally with as it has happened for the emerging market? Will we look ahead of 10 years of nowhere? That depends on a lot of factors, but is something that we have to think about. Because also from the dot-com bubble, we had about 12 years of absolutely zero stock market returns. Only in, what is this, 2013 did we surpass the 2000 level. So that's 13 years of nothing. Also, when it comes to bubble indicators, if we look at the forward price earnings ratio that takes into account the estimated earnings for the market, we can see that we are at extremely high levels, much higher than the 25-year average, also from the lows of below 10 in 2008. Of course, if you bought in 2008, below 10 means returns of 10–12% per year, and that is exactly what happened. Emerging markets, on the other hand, are a little bit cheaper, 15 price earnings ratio. China is also in line there. Europe is still cheaper, but still expensive, maybe for Europe. Japan is also there in line with Europe, but the US is the expensive market. So I wish I knew whether we were in a bubble. We are in a bubble if it bursts. If it doesn't burst, we are not in a bubble. So let's go into some economic indicators, money printing, monetary indicators, and let's just give an overview of the market to give you a feeling of the risk of it being in a bubble and reward of not investing, because that's the way now. Fear of risk, and what is the alternative? Where can I hide? The economy, state jobless claims in the US fall to lowest since March, so that is a positive from this very bad situation that was during the first COVID hit. On a positive outlook, if we look at the percent of vaccinated people, we are at 30% in the United States, and things are getting better and better, especially as they vaccinate older people who are more at risk from COVID, so we should be done with it probably over the next few months, and perhaps we can count on normalcy from summer onward. That would be really, really remarkable also for the economy, because we have now then a big growth coming ahead, perhaps even inflation, which is also a factor, so a lot of things to watch, but for now, thankfully, positive things. However, those positive things come also alongside very positive monetary policies, so zero interest rates for the medium term, longer run, hoping to get to 2.5, which is what they almost reached in 2017, but far from the 5% of 2006. Also, both the Fed, the ECB, the Bank of Japan and Bank of England will keep printing and printing trillions and trillions into the system, $3 trillion planned to go in per year, and then if we have another crisis, they will print simply more and more. If we look at government deficits, the plan for the US is simply to be 5% of GDP deficit every year for eternity. So borrow as much as you can, like there is no tomorrow, because you can simply print your money and then borrow it and nobody cares. However, this might lead to economic growth. Globally, we see 6.7% rebound. That even covers the 3.6 decline in 2020 and then 4.5, which means that things might be overheating, and they can print money, they can keep interests low as long as there is no inflation to prevent doing that. For now, measured inflation is still very low, but I feel it is a lagging indicator. We see a lot of commodities prices going up as there is more and more employment, maybe even wages will go up. So we might see how that works out over the next 3 to 5 years. That's a long-term risk that one has to keep in mind. However, when it comes to inflation, we are, let's say, now in a period of low and rising inflation that has happened only 4 times since 1998. The best investments are still emerging market equities in this case, that are cheaper than the US, but still growth equities, equities in general, small cap, whatever related to equities. The worst place to be is, of course, cash. If we hit higher inflation and rising inflation, then again the best place to be is emerging markets, because they produce a lot of those commodities, etc. But still, equities are the best place to be. So not much to hide. The worst places will be, especially with zero interest rates, bonds, cash, etc. And the future might be opposite than what we had over the last 30 years, which is, and occurred 13 times, the most times, which is low and falling inflation. When equities do okay, emerging markets do terribly, so that is the trade-off, but this is, I think, unlikely to have even lower inflation going into deflation with all the money printing. And that's also the reason why stocks go up. We just had BlackRock reporting highest ever flows into the fund, which means that investments, everyone is looking for equity exposure, because that might be the only place to hide now. One place to hide is, of course, Coinbase. With cryptocurrencies, the market cap is now, what is this, 63 billion, probably diluted, will be much higher, 80 billion. Yesterday at the IPO was even 100 billion. I'm not going to comment of these declines, this is just engineered IPO prices, exuberance or not, but this is also shows that there is so much money that it's happy to go into alternatives because of fear of inflation. However, I have looked a little bit at the Coinbase listing, and they say this, that our total revenue is substantially dependent on the prices of crypto assets and volume of transactions conducted on our platform. If such prices of volume declines, then the business also declines. And the price of crypto assets and associated demand for buying and selling has historically been subject to significant volatility. And now here comes, okay, what is this? Is this investing, or, as they said, depending on demand and supply, is this speculating? When it comes to long-term investing, I prefer to miss out on these speculations because cryptocurrencies for now are not producing anything. Yes, they can create an open financial system for the world, but I'm not seeing it transponding into the business yet. This was more likely a few years ago when it just started. I remember 2015-16, you could buy a coffee with bitcoins, etc. Now it's like out of the spectrum. Now it's more just a financial gambling or price demand, or replacing the system with legitimacy. Okay, it might happen, and I'll talk about investing in that a little bit later. However, if we look at the company, the market cap was what, 60 to 80 billion, depending on the day and who is buying Katie Wood or not. But if we look at revenues, 2000, we are at 1 billion. So 1 billion in revenues. If we look at the Nasdaq that has a market cap, the stock market, of 25 billion, they make 1 billion in free cash flows per year, and they are trading things that all are too increasing, as we have seen with the BlackRock market inflows. And I wanted to just tell you here what is the difference between my investing and why I'm happy to miss out on these extreme booms like Coinbase. I missed on Tesla too, that's fine. I missed, however, on the dot-com bubble. I missed on the emerging market bubble in 2007 and the 80% decline afterwards. I missed on the gold bubble in 2010-11 and the 85% decline of gold miners afterward. I also missed another Katie Wood stock, which is DDD, so I completely missed this market, this situation, and I also missed this upside of the last year, but I missed definitely this, but I also missed the other way around, which is what often happens with these demand and supply situations. So with these things, you have to watch demand and supply. I prefer to watch earnings, to watch business producing, but if you want to watch demand and supply, you want to be a great trader, I'm going to recommend you a book. This is a very interesting book, very nice read, very nice stories, Market Wizards. So you can learn a lot, and then you can see whether trading and watching the supply and demand or something else might be for you. And then there is something else. As I said, I'm happy to miss all the bubbles because we know what happens when the bubbles burst. But if all of this is really to change the world, if it is, I can still invest in 2027 in this and still make good returns with much less risk. For example, I think it was 2007 when Steve Jobs launched the iPhone and it went up, and then this old guy called Warren started investing in 2016. This is 9 years after the launch of the iPhone. And even if you bought this, 2 years ago, you would still have made remarkable returns. So there is always time when you are certain that something has low risk and good return, then you can still invest. And that's also what I'm doing. I'm looking for lower risk. I don't want to avoid those big crashes because it doesn't allow for compounding over the long term. Yes, Bitcoin compounded for a lot of people. I'm very happy for that. That's great, but there is always risk, and at every point in time there is the risk that it crashes 80%. And that's something I prefer avoiding, or I'm happy to take 80% risk. Even stocks can crash, but I'm sure that the businesses I own will keep producing no matter what. That's the difference between long-term investing and speculating. That's it. So I wish you all the best if you are long Coinbase or crypto. Nothing wrong against that. Just want that everybody knows why am I positioned different. That's it. On the question of whether there is a crash or crash ahead, we just recently discussed with Li Lu, and perhaps the best position not to hide but to place yourself is in businesses that will do good no matter what. So imagine that the stock market crashes 50%, that we have stagflation in a lot of countries. If you own a business that will do good, perhaps even strive, because all of the other competitors and zombie companies that we have now fail. So if you own a good business, it will emerge better. Then you have done something remarkable and you are a real investor. And that's also the message from Li Lu's interview, which is my worst performing video when someone smart talks. So watch that if you want to hear about core investing. Because investing is about finding businesses that will do great no matter what. So crash, inflation, and then if you find those, you can really slow and steady accumulate wealth over time, allows you to sleep well too, and increases certainty and also your health. So in line with that, tomorrow we'll talk about my model portfolio that I launched 3 years ago, how it's doing, what is the strategy, how it's going on. And then on Sunday, I want to talk about a good business to put this into perspective. What happens if Google crashes? What happens if Google doesn't? What are the expected returns? And is Google perhaps a safe place to hide? Click that like button, subscribe, and I'll see you tomorrow.